Hello my friends, Marv Eisen from Timeless Dollar here. So, what did the little bird say to the day trader? Care to guess? I won't leave you in suspense. The little bird said, "When are you going to leave the nest?" Day trading can be a little bit scary, intimidating. Many times, new traders start paper trading and for some reason they just can't bring themselves to pull the trigger. And this is common. There's a time where you have to leave the nest. So if you're one of those traders who are paper trading and you just can't bring yourself to trade with real money, let me suggest to you that you trade with micro E-minis. Micro E-minis are only $5 a point and you can't really get hurt, especially since you can keep your finger on the trigger and get out of a trade as quickly as you got into it. There's virtually no slippage when you're trading micro E-minis. How do you trade and make money? If you know that trading is not easy, you respect the market. And that's number one. You must respect the market. I teach two methods of trading, a short-term method and a long-term method. In my short-term method, I teach 6 trading setups, only 6 trading setups. And in terms of using indicators, well, there are 200 indicators that you can put on your chart. I use only one, the stochastics. For long-term trading, I use the Taylor trading technique, which is a series of mathematical calculations based on how the market has risen and fallen over the past several days. And it's an average of averages with a number of different mathematical calculations going into making up a trading zone. So the 6 short-term trading methods that I teach are gap, support and resistance, time and price, trend, momentum, and candlestick setups. There are only 6 trade setups that repeat all the time. You can recognize them as they set up most of the time. The easiest way to tell where the market is likely to go in the near future is where the market is likely to turn. And that's where the stochastics is very useful as a confirming indicator. So here's my chart, and this is the last day of trading. This was Friday, October 14th. The prices started gap up. This was the previous day's close. This was Thursday's close. Prices started gap up, closed the gap, and then traded down through my trading zone. And there are a number of the trade setups that I teach visible on this chart. So now let me talk about the longer term trade setups using the Taylor trading technique. Now the Taylor trading technique is designed to try to estimate where the market is likely to trade on any given day for the following day. All right, so these trading zones I put on my chart before the market opens, actually the evening before, because I calculate the numbers when the market closes the day before. And so my use of the trading zone is for the purpose of giving me an area where the market is likely to trade. And so here we see the prices traded within the trading zone for the day. And usually they'll start at one end and trade down through the other. So how accurate is this trading zone calculation? Well, you're looking at the electronic chart with all the overnight price data over here. Let me go to the regular trading hours. This is Friday, October 14th. This is Thursday, October 13th, and this was as a result of a FOMC. And as you can see, the prices did trade up through and above the trading zone, but all through it. Again, the day before, on a Wednesday, October 12th, prices traded within the trading zone and bounced between the previous day's close and the calculated resistance. The prior day, again, prices traded within the trading zone, basically respected the support and resistance numbers. Day before that, prices again within the trading zone, bouncing between the previous day's close and the calculated support. And the day before that, again, within the trading zone, starting at one end, down through the trading zone, briefly breaking it and then trading back up through it. So the longer term technique. Now, the trading zone is not something for novice traders. You can make a lot of money trading the trading zone, but it takes some Practice, well, what type of trading doesn't take practice? But again, it's a longer term technique. I would recommend for new traders, novice traders, you learn the setups, specialize in only a couple if you just want to trade and become a specialist. I generally recommend that if you learn only one trade, learn the gap trade. The gap trade is a trade that closes very often and is seen very often, and it has a 75% chance of providing success. So that's my video for today. You now know what the little bird said to the day trader. Don't be afraid, leave the nest, pull the trigger, and use the micro E-minis to start. Thanks so much for watching. Trade safely, use lots of patience, and I'll see you in my next video. Marv Eisen for Timeless Dollar Trading Academy.